All right, we're moving on with the programming, but a very quick one here coming from the Twitter handle of the Nigeria's Economic Financial Crimes Commission, the EFCC, saying a court has convicted a former Director General of NIMASA, Callistus Obi, over 136 million naira fraud. That's coming through for about a few minutes ago from EFCC's Twitter handle, saying a former Director General of NIMASA, that's the agency responsible for Maritime and Space Agency, NIMASA, that's Callistus Obi, been convicted by a court, 136 million naira fraud. That's just coming through right now as we're live here. But the big story out of London, we'll see how the market's pissing out. Give us a few minutes. Let's check in with our debt market. It's been a very interesting week of not just the GDP numbers, but of course the Monetary Policy Committee of the Central Bank leaving all key interest rates unchanged. So let's get to FMDQ Exchange place right now, where Bankole Odusanya, who is the head of fixed income at UBA, is talking to us. Bankole, good morning. Welcome to the show.
Good morning, Boston.
Wrap up this very interesting market week for us. Here we were yesterday, and we saw most of the most actively traded Treasury bills down from 12% into the 11% yield territory.
Okay, Boston, thank you very much. Like you said, the major highlight this week was the MPC meeting, where most players in the interbank market, some anticipated a drop in monthly deposit rate from 13.5 to 13%. But what happened was that the Monetary Policy Committee, in its wisdom, decided to retain. And they gave very clear reasons, because fine, we've seen an uptick on inflation, and there's still a good watch on FX stability, you know. The central bank governor then went further to hint that the MPC was looking at ways to limit the participation of deposit money banks in the auctions, that's for treasury bills and bonds. This actually brought some quiet to the market. What had happened initially as at Monday, Tuesday was that the market was bullish. We saw rates drop, like you just highlighted, from 12 to 11% levels, bid at 11.7, offer at 11.45 levels across the yield curve. So upon that pronouncement, we've seen some level of uncertainty and reduced activity. But upon the issuance of OMO yesterday, the central bank issued OMO bills, 3 different maturities, which the 1 year stopped at 12.5. This also caught some participants off guard, because this rate was slightly higher than expected. Market envisaged 12%, given the drop we had seen in the interbank market. That's the secondary market. So, but basically, the major highlight this week was the monetary policy retention of MPR and all other monetary policy stance, and then a view on inflation, like you said.
Okay, so give me a minute or less of your outlook for next week, starting Monday. Is the inauguration? There's going to be a public holiday on the 29th, so your market week next week has been shot by 1. What's your outlook?
Okay, outlook is a liquid market and a bullish market. This is because federal allocations have just started dropping this morning. OMO yesterday took out 360 billion bonds on offer. The bonds were offered on Wednesday are settling today also. So system was supposed to be tight, but federal allocation just coming in today. And so that fund is supposed to last all through next week, where we expect that to stimulate the secondary market, where trading is supposed to drag yields further down into 10% territory. As for bonds, we've seen a gradual decline in yields from 14.5 to 14.12, and then 14.49 on the 2049, which is the 30-year bond. So it's a steady movement on the bond market. However, it's quite very active on the treasury bill side, as determined by the level of system liquidity, which has just hit right now.
Okay, thank you so much, Bankole Odusanya, the head of fixed income at UBA. Enjoy your weekend. You're already dressed up for the weekend. I need to get out of this after the show.
Happy Africa Day.
Thank you so much. Happy Africa Day.